Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my pick in May. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been negative since we grew less than I expected in the daily number of visits, and we have experienced a high decrease in daily new subscribers and visits. Maybe is due to my inactivity only uploading 2 videos this month. As a result, this month we have not reached the goal of reaching 4,000 subscribers. So for this month the goal will be to reach 4,000 subscribers. Do you think we will make it? The evolution of the investment made last month has been negative, as it has declined more than 2%, and in overall the portfolio also has performed in a poor way with almost 4% downside. Nike again, Texas Instruments and Starbucks are the worst performers this month with over 10% and 15% decrease respectively, while the best performers are Eurofins and Iberdrola with more than 10% upside during this month. Additionally, more good news is that during this month we have received 7 dividend payments. Specifically 54 cents of Texas Roadhouse, €1.72 from Comcast, €3 from Vici Properties, €1.25 from Nike, 92 cents from Amdocs, 99 cents from T.Rowe Price and €1.53 from Eurofins. That makes a total of €9.95. This month I will add a company that I don't have in my portfolio in order to increase my diversification, and due to the low exposure to tech sector companies in this portfolio and also good momentum to invest in them after a slight correction, I decided to add a new tech company. That is why this month I am going to only analyze one company. This company would be the well-known Salesforce. Let's start by checking the dividend safety. Despite it has started recently to pay dividends, we have the free cash flow payout ratio of 2024, that is 12.5%, so a ratio below 25% and indicating that continues reinvesting the money into the AI and other investments like the purchases of new companies. Although we don't have a clear history to assume the dividend growth in the future, the company announces an increase of 5% for this year. So despite not being a huge increase that some investors were expecting, this is not bad news, because the increase is over the inflation rate and allocates the free cash flow in company growth. Regarding dividend yield, currently Salesforce is close to the all-time highs and went above the average of the last year dividend yield value around 0.55%. Continuing with the evolution of the revenue and earnings, this one has been so positive during the last few years, growing at around 20% compound annual growth rate since 2018. Now, if we look at the evolution of free cash flow over the last 5 years, it is also as good as I am expecting in one company, and since 2022 Salesforce has had a huge free cash flow margin expansion. Additionally, looking at free cash flow yield, actually has returned to its 5-year all-time high from 3.5% to almost 5%. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. In this case, Salesforce had started a buyback program in 2022, reducing them by around 1.5% since then, and it is to be mentioned that during 2024 they spent around $7 billion in buybacks, so almost 70% of their free cash flow. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. Salesforce is below the 5-year average price-to-earnings ratio, close to 2023 valuations, and the company has growth since then. So it would be a sign of an undervaluation. Moving on to shareholder yield, here with 3.68% yield and close to the 5-year highs, and indicates that Salesforce is more active in regarding shareholders through buybacks, dividends or total debt reductions. Additionally, looking at the financial health, currently Salesforce, it has negative net debt, meaning that with cash and cash equivalents, it can cover its total debt and still have almost 10% of a year's worth of free cash flow left over. However, Salesforce's trend seems to be inconsistent with their debt reduction or increases each year. Once most of the important metrics have been analyzed, then this month we enter the Inetractive Broker and carry out the operation, looking for the CRM ticker. Remember that I will always try to make a purchase in order to have a commission less than 1%, and here in Interactive the commissions are 35 cents per trade. I need to mention that in the coming months, I'm going to make a very big change to the value of the trades I'm going to execute. This is because I've decided to unify my personal portfolio, which I've had since 2020, with the one created from scratch here on YouTube. And since the broker where I have my personal portfolio won't let me transfer positions, I'm going to sell those positions and move them here little by little. I hope this doesn't bother you, as I understand that the interesting thing about this series was to see how it was evolving month by month from scratch, and with this measure, we'll make an incredible jump in value over the next year. I don't know if I'll be able to maintain them in the future once I've brought all the positions. This month, I made 2 Salesforce trades, the first for 1 share at $250 and the second, a week later, for 2 shares at $265. So, I invested in 3 shares, representing a total investment of almost $780 and a commission of 70 cents, which means a commission of 0.1%. With this broker, we're reducing the commission slightly, and in the long run, we'll see the difference. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made each purchase, Salesforce's ticker, and finally I need to look at the euro to US dollar exchange rate because its price is in dollars and I want to reference my investment in my local currency. As you can see, it gives me a total of €687.12, adding the 62 cents fee. Now let's move to the position sheet and placing the ticker in the first column. It automatically adds the number of shares and the average price per share. We add the technology sector reference in the column, and as you can see we have more than 3% upside in only 2 weeks, and also is the biggest position of my portfolio with more than 13% allocation. Additionally, this investment will allow us to reinvest 0.02 shares annually via dividends. As we are already in the month of May, I will move on to the monthly value sheet, and in the month of May 2025 we will write the €5,367.50 that our investments are worth in the market. This month the portfolio made a downside of 3.18%, which is more than the 0.76% that S&P 500 has obtained in the same time period. So this month we underperformed the market again. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you liked the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time.